Hey everybody, we're just going to go over the market indexes today, and then we're going to see the effect of the CPI data. It was definitely a volatile day. CPI data was actually worse than expected. I believe it came in at 7.5%, and we saw an initial drop in market futures, but then by the time markets opened, there was a pretty strong rebound. But towards the end of the day, the Federal Reserve President James Bullard, he said that he'd become, quote, dramatically more hawkish in the light of inflation. And I believe that he was arguing for a 100 basis point hike by July 1st. And after he said that, markets started to sell off kind of aggressively. Now, we're going to look at some key levels here and kind of take a look at the broader picture and see whether or not this is something to be concerned about or not. I'm just going to go ahead and tell you personally my opinion. I kind of think it as more of a nothing burger. You know that you guys know I've had this view kind of for a long time. I think if you have a strong company with great earnings and great growth, and they are able to thrive in the broader macroeconomic environment, I don't think you should be so concerned about rate hikes because we've done them in the past. Companies, nothing fundamentally really changes about the companies per se, as long as they're not crazy leveraged or have insane amounts of debt. I mean, they should be okay. Obviously, inflation is creating some pretty big complications, and 7.5% inflation in the last 12 months. Obviously, unofficial rate is much higher than that, but this was still, I think, a shocker for everybody. So really, the key theme for today was CPI came in higher. Markets initially seemed like they were going to sell off, had a massively strong bounce, and then Bullard's comments came out, was more hawkish, and we saw markets kind of dump in the last 15 to 20 minutes. So we're just going to go ahead and get started here. The first chart we're going to actually look at is going to be S&P 500. Now, I got some feedback, and some of you were saying, why do you look at the indexes and futures rather than, just SPY or QQQ? Usually, I just like to look at the indexes because, these ETFs are modeled after the indexes. But I realized for, sake of simplicity, it would probably be easier for, the majority of people just to see, SPY or QQQ or IWM instead of SPX or NDX or the RUT, just because you can actually see the price points directly and have those levels. Because I know a lot of people don't actually trade the indexes. Even me, I don't trade the indexes. I trade the ETFs, but I found the indexes to personally be a little bit more accurate, in displaying the price action. But we can go ahead and use SPY or QQQ or IWM. I think the difference, for the majority of people is pretty negligible. So we'll just be using the ETFs today. If you guys aren't a fan of that, then just let me know in the comments, and hopefully we can come to some common ground. Okay, so the first thing I'm actually looking at here is we're going to go ahead and actually go to the daily chart. So really, my process whenever I take a look at the markets, end of the day or before market opens, is I like to look at just a daily candle at first, so we get a kind of broader picture of what how the day went. Right here, you can see we had a pretty strong wick, but we did not break 458.12. That was the key level of resistance, and it absolutely held. I mean, technically, right here, we have a triple top, and we didn't hold. We completely rejected it. Now, what I'm seeing here is our 9 EMA on the daily chart is actually crossing above our 20 SMA, which is actually dropping pretty significantly. So that is actually a good sign because it's telling us that the price action, more recent price action, is increasing, and the buyers are stepping in relative to the amount of sellers. That's usually how I like to read whenever lower period moving averages move above the higher period ones. But even with that happening, I mean, we did see kind of an adverse reaction today, and this could be considered an inverse hammer candle, which actually is pretty bearish. But we're going to need to zoom in more to get a little bit more clarity. But with that being said, we filled the gap for sure, right? There was a question yesterday. We were talking about how there was a potential we could fill this gap because we closed right at resistance. We filled the gap. The next immediate level of support that I'm seeing right here is our 38.2% retracement. That coincides with the daily 200 SMA. So you could go ahead and mark on your charts 443.85 to 444.01. That would be the level of support to watch. If we don't hold that, then we're probably going to move lower and test the bottom of this symmetrical triangle that we've formed. So we're going to go ahead and look at the 4-hour chart here because it gives us a little bit more clarity. Really, the key thing to watch here is this symmetrical triangle that has formed. These can be pretty difficult to trade at times because really things can go in either direction. So you kind of just have to wait and be patient. Really, the big thing here is tightening ranges, right? So we've kind of just been trading within this forming range, right? We did break out for a little bit, but there was basically absolutely zero follow through, and bears just kind of ate the bulls right there. But someone would also argue that we are forming higher lows, so that could be something for the bulls. But really, I would just be a little cautious here. The way I'm going to probably be playing this is waiting for a clear break in either direction. So for example, if we break below the 4-hour 50 SMA, then I might be thinking, okay, this is something that I need to watch. If we break below our 0% retracement, that will probably give me more conviction. And obviously, if we break below this symmetrical triangle, then I'm going to be eyeing 425, the low 400s, the low 420s as my target if I do decide to play puts. Now, if we do manage to break out here, then really the level to watch here is going to be 458.12. That's the key level right there. I would first focus on that, and most likely what would happen is by the time 458.12 is tested, that will probably coincide with our daily 200 SMA as well. So that's going to be a very, very strong level of resistance to watch. 458.12 is a level that I would go ahead and mark. Okay, so next up we have the QQQ. And so remember the QQQ is just an ETF version of our NASDAQ. NASDAQ 100. So what we want to watch here is a very, very similar situation. So if we go to the daily chart, right, we had a similar inverse hammer candle, right? But if you look at this, we actually held our level of support very well, but we're actually hugging, literally, we are at the confluence of the 4-hour 50 SMA and the bottom of our symmetrical triangle. So this is something that we really, really need to watch here. I would give it a little bit of wiggle room. I would say maybe up down to the 23.6% retracement, and we're okay. But if we do close definitively below this 50 SMA, I think that we could see a move lower. Again, similar situation with SPY. Bulls would argue, look, we do have higher lows forming, and we are right at level of support. So if you have a high level of conviction here, and you are confident in the tech's earnings, which actually for the most part have been pretty solid, then this technically would be your area where you would be loading up on calls if you anticipate a move higher. Just know you're going to have some pretty strong levels of resistance. This 4-hour 20 SMA has kept things kind of pinned down, and we finally broke above it. But just as we broke above it, we tested the top of our symmetrical triangle resistance, and we failed to break out. So this is definitely something to watch. Keep an eye on this tightening range. If we do manage to move above the 20 SMA, I wouldn't really worry about this 9 EMA. I would be more focused on this 100 SMA here on the 4-hour. This is the level that I would be watching. If we do manage to break above it, then I think we could be headed towards probably 367. If we could close above that, then really we're looking at 372.05 as our next level of major resistance. Now, on the flip side, if we close below the 4-hour 50 SMA, close below the 23.6% retracement, then yeah, I think we could be looking at a test of 350. If this breaks and we have a clear breakout below 350, then it's pretty probable that we're probably going to test a 340s high to mid 330s. So definitely those are some levels to watch. Okay, we have the IWM, so Russell 2000. So obviously we had been range bound for basically the entire year. And we have been making these higher lows. I think what's interesting to watch here is actually, I'm going to quickly go to the daily chart here, just so we can look at it. The Russell 2000, technically speaking, closed better than both the SPY and QQQ. And the reason why I say that is because it is above its daily 20 SMA, and we have our 9 EMA moving up. So that confluence is going to create a strong level of support. Again, lower period moving average moving above a higher period moving average. That's a bullish sign. But we did still get this inverse hammer candle, massive wick, small body. So I wouldn't be surprised if we do see a break below the 9 EMA here. If we can hold it, that would be very bullish, and I actually wouldn't mind looking at some call positions here, or at least on some some of those hyper growth names. This gap filled, obviously, but relatively speaking, we've held, we're holding this level of support well. I think tomorrow will give us some more clarity. On the 4-hour chart, what is interesting to note is we do have this inverse head and shoulders, right? So here is our left shoulder, here is our head, and here is our right shoulder. And look, we did break out, but we broke out and we haven't gotten enough follow through. Right now, I would still say this pattern is still valid so long as we can close above this 4-hour 100 SMA. If we're not able to and we move lower, then I probably would not be so reliant on this inverse head and shoulders. But that is definitely something to watch, and that's kind of why I'm approaching these markets right now with a little bit more of a bullish bias, despite what many may be saying. Because if we look at the broader market earnings right now, I think right now we're really seeing a separation of the wheat from the chaff, right? So you're getting quality, and then you're getting stocks that are really not so good, going down in valuation. So I think right now what's happening, I think some things are definitely overblown. But for the most part, if you are a long-term investor and you see the opportunity in many of your favorite names and the fundamentals are there, this is great. This is exactly what you should be looking for, and this is something that you should probably be taking advantage of. Again, not financial advice, but just something to consider. So really the level that I would watch here is on the 4-hour. I would watch this daily 20 SMA. If we break below this, we could probably see a move down to about 199. That 50 SMA is definitely going to be something to watch as well. Break below that, I wouldn't be surprised if we test low to mid 190s. Now, on the flip side, if we are able to break above this 100 SMA, then I think we could see a move back up to about 208. If we can break that level of resistance, really the next strong level is going to be 212.35. That's going to be our 4-hour 200 SMA. And then last but not least, let's just go ahead and take a look at the VIX. So we had a little bit of a spike here, but what's funny is we did close while we were testing this 4-hour 100 SMA. That just seems to be the theme for the day, the 100 SMA. So looking at this, how would I be playing VIX? Well, personally, I don't play the VIX just because I think it's a little bit more complex. I mean, you can read into it, but there are a lot of different variables that play with VIX. I know some people that do play options on it, and it is not saying it's very impossible to do, but it definitely has another layer of complexity compared to just options on standard equities or even ETFs. But we did close while we were testing this 4-hour 100 SMA. Really, I'm just seeing a lower high here. So this isn't something that is particularly catching my attention. Downtrend, right? So let me redraw this. Made a low, lower high, higher low, lower high, lower low, right? So this is just continuously kind of moving down. I wouldn't be surprised. Maybe we could see tomorrow morning, we could see a spike to 25, but I highly doubt we're going to break above that 50 SMA unless there is some major news. So I'm probably more, I'm leaning more towards VIX moving back towards the 200 SMA on the 4-hour, and then hopefully we see it move below 20. Okay, so now we're going to actually go over some of the trades that we took today. So how this is going to work is I'm just going to go ahead and kind of show you the chart, show you where I entered, where I exited, and then kind of give you a description of how the trade went. If you want verification and proof that I actually did take the trade with my account, I also post everything to my Instagram page. So the Instagram page is Stocksplaining, same as the YouTube channel name. So you can go there and if you click on my story or tap on my story, you'll see I will have posted the actual trade receipts. So you can verify everything that I'm talking about here. Okay, so the trade that we actually ended up taking today was on Square. So let me go ahead and quickly pull it up. It'll give me just a moment. So the trade we took, it was at 12:06 p.m. Eastern time. So let me just go ahead and pull up Square. So if I'm day trading, I'm going to be relying usually on the 5-minute time frame, but I like to also reference the hourly. So what caught my attention with Square was I was actually looking at the hourly chart here. And go ahead and pull it up. Okay, let's see. Okay, yep. So this is where it was. So what caught my attention was our RSI at the time was pushing near overbought levels, and we were approaching this level of resistance. So usually when your RSI is moving higher like that, and you are almost entering overbought territory, and it looks like you're going to break resistance. Another thing I used was the relatively strong volume that we saw and MACD crossover. So that was kind of my thought process when I was entering this trade. And I noticed that, okay, we could be testing this level of resistance. So even if we don't fully break out of it, there will still be a move upwards. It's just going to be a matter of identifying that level of resistance that we are going to hit beyond the top of this line. So beyond this level of resistance. So the line that I was watching has basically been, I'm going to go to the daily chart here. Okay. So essentially it was Square. I've been following the daily chart pretty closely here because it looks like we keep we're range bound between this channel essentially, but there were a few times where we broke out of this channel and it seemed like we were going to actually test the 20 SMA on the daily and break above it. So what we did was we took entry on some weekly options. the reason why is because the reason I don't usually trade weeklies. If I do trade weeklies, they're only going to be into day trade alerts. I won't swing trade any weeklies. So what we did was the thought process was, okay, we have weekly contracts. We are nearing resistance, but we have strong volume, and our RSI is not quite overbought, but it's approaching that level. So I was looking at the hourly chart, and I saw, okay, this looks like we are making higher lows. Sure, we are getting a little bit of indecision here, but we do look like we're pushing forward. Broader market, it looks pretty healthy. I was also watching QQQ at the same time. So I was following the tech index, and then I was also following Square. So I saw that we were making higher lows on an hourly. I switched to the 5-minute chart for a little bit more precision. And that's where essentially I took my entry. So right at about 9:06 a.m. Pacific time, so about 12:06 a.m. Eastern, I saw that we broke above this 20 SMA, and I had us take our entry. So we broke above it. Volume was looking relatively strong. Again, we surveyed the hourly, and it seemed like we were going to get some sort of breakout here. And so really the thing is with weeklies, a lot of time they are at the whim of implied volatility, right? Implied volatility is going to be subject to much greater swings. So in this case, Square really did not move that much. I mean, it only made a high of 119. So we only hit our first target on this, but we still managed to take a 50% gain. And that's just because of the implied volatility on the weekly contracts. So entered about here. Once we started to test resistance, I was warning people, and I said, okay, we have 15% here. Target one reached at 26%. Feel free to raise your stop loss. And then by 12:27 p.m. Eastern, I took profits. And really what made me take profits was I started to notice a little bit of weakness in the broader market. Things kind of seemed like they were looking like they were going to pull back. And the other factor was it was a little bit suspicious to me how with the increased CPI, we did not get a sell-off at all. So part of me was just kind of being on edge thinking, oh, sell-off is going to come any moment now. It's going to come any moment now. Let me just take those gains off the table. But what really did it for me was we started to kind of flatline here, and we started to kind of hug this level that we had broken out of, which is actually not a bad sign. Usually when you flip your resistance and you turn it into support, that's a good sign. But volume started to kind of fall off, and on the hourly chart, we were clearly struggling to break above our level of resistance. And we started wicking, and that's when I said, okay, I'm going to take profits here, 51% on a trade, 26 minutes. I'm completely happy with that. You never go broke taking profits. Took the profits, and by 10 o'clock, we started kind of dropping, and then the big dump started coming after 11 o'clock. And that was just absolutely massive, massive, massive dump. So that was kind of how we approached that trade. I also did do a swing trade on Silvergate Capital, but that one was not alerted because it was a little bit more volatile. And how we're approaching our trades right now is we're approaching it with a model portfolio of about $5,000 to $10,000. So we're trying not to use more than 20% of our portfolio value, and that trade actually used a little bit more than 20%. So when it uses a little bit more than your allocated value for our profit and loss calculations, we don't alert it. So that was also a trade that we did, but really all it was is if I pull up the chart right now, with Silvergate, this was actually a swing. I bought the 318 contract, and we were watching the weekly chart on this actually, because the weekly chart had a clear breakout and our MACD looked like it was getting ready to curl upwards. Bitcoin's price was increasing. These guys hold Bitcoin as collateral on their balance sheet. So um, that they are obviously uh, very, very exposed to the price fluctuations of Bitcoin, which can be a good or bad thing. But I saw we were testing this resistance level on the weekly, and I noticed that we failed to break above this level of resistance on the daily, and we could still break above it. The chart actually was not too bad, but out of overabundance of caution, I had about a 25% gain on the contract, and I was honestly okay with that. I wanted to kind of raise cash. I might consider a re-entry on this if we could break above. Maybe once we see this 50 SMA move kind of below and we could recapture this level, then I think we could take it upwards to the 38.2% retracement. But in the meantime, I just took profits on that. So that was the second trade that we did. That was more just of a swing trade. And I followed the weekly chart and then used the daily 200 SMA as my guide. So those are the two trades that we did. Again, the first one was alerted. The second one, it was discussed in the group chat, but we did not alert it. If you want to see the proof of these trades, they're going to be on my Instagram page. It's going to be stock explaining. So you can see the proof of the trades there in my story. We're going to go ahead and wrap up the video. If you have any questions or concerns, feel free to let me know. If you guys want to join our Discord, it's just $30 a month. You get access to these types of reports. You get morning and end of day briefs. You also get a spreadsheet where we track all of our trades, and you get a really, really awesome community. We have a lot of fun there. And it's always fun whenever you are able to trade and invest with people who bring different views, different perspectives. And, this is definitely something that is not, a sprint. It's a marathon. We're always learning. I'm always learning. And if you keep persevering, if you allocate your position sizes accordingly, and you use proper judgment, whatever that may be for you, you will really create your edge, and you can outperform the broader market. So that's my little final spiel for you all. And if you like more of these videos, if you have any requests, comments, questions, concerns, anything like that, just let me know down below. One more thing, do be careful of scammers in the YouTube comments. There are people that claim they have WhatsApps, or people that say, oh, send me Bitcoin and I will send you double the amount you send me. Those are all scams. Just please be aware of those. And we will see you next time. Take care.